Hey everyone, and welcome back to the channel where we demystify the markets. Today, we're diving deep into a fascinating micro-cap stock that recently popped up on our hard-to-borrow screener, BJDX. We'll break down why this stock is attracting attention from a short squeeze perspective, what its hard-to-borrow metrics mean, and what to watch for. BJDX is a prime example of how extreme borrow costs can flag unique situations in the market. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, let's talk about BJDX. This is a microcap company, and while its specific sector isn't readily classified, its small market capitalization makes it particularly sensitive to market dynamics, especially concerning short interest and borrow availability. Looking at recent price action, BJDX has seen zero movement to date, holding steady at plus 0.0%. Over the last 5 days, it's also been flat, showing a plus 0.0% change, and the last 30 days tell a similar story with plus 0.0%. Volume-wise, today saw 0 shares traded, and its 30-day average volume is also 0 shares, resulting in a relative volume of 0x average. This suggests a stock that is currently very quiet, but as we'll see, that doesn't mean there isn't underlying pressure building. What is cost to borrow and why it matters? Before we get further into BJDX, let's quickly define what cost to borrow, or CTB, means and why it's so important in understanding potential short squeezes. When short sellers want to bet against a stock, they first need to borrow shares from a broker. Just like borrowing money, there's a fee involved. This is the cost to borrow. It's an annualized interest rate paid by the short seller. The higher this fee, the more expensive it is to maintain a short position. Extremely high CTB rates, often exceeding 100% annually, signal that demand to short the stock is very high, or, more commonly, that the supply of shares available to borrow is extremely scarce. Why this stock is hard to borrow right now? Now let's apply that directly to BJDX. This stock appeared on our screener for a very compelling reason. It currently boasts an annualized cost to borrow fee of a staggering 745.4%. Show CTB on screen. To put that in perspective, holding a short position in BJDX costs over 7 times the principal value in fees every year. We also saw CTB momentum drop by 228 percentage points over the last 5 trading days, meaning this cost was even higher recently, signaling intense pressure. Adding to this scarcity, there are only about 2,000 shares currently available to borrow from brokers. This incredibly tight supply, combined with an estimated float of just 0.9 million shares, creates a highly constrained environment for short sellers. Our internal composite squeeze score, which combines factors like CTB level, momentum, borrow supply, float size, and technicals, currently gives BJDX a score of 55.5 out of 100, indicating a significant potential for volatility if conditions change. Squeeze mechanics explained. So, what does all this mean for a potential short squeeze with BJDX? A short squeeze happens when the price of a stock rises sharply, forcing short sellers who bet against it to buy back shares to limit their losses or meet margin calls. This buying pressure then pushes the price even higher, creating a feedback loop. With BJDX's 745.4% CTB and only 2,000 shares available to borrow out of a tiny 0.9 million share float, short sellers are paying a premium to stay in their positions. If BJDX were to experience any significant buying pressure, the shorts could quickly find themselves in a bind, struggling to find shares to cover their positions, potentially accelerating a price increase. However, it's crucial to understand that a high cost to borrow, even one as extreme as BJDX's 745.4%, does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction in their bearish thesis and are willing to pay these exorbitant fees to maintain their positions. Dilution risk check. One critical factor that can negate even the most promising short squeeze setup is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can depress the stock price and provide fresh supply for short sellers to cover, effectively deflating any squeeze potential. For BJDX, our checks found no recent dilutive SEC filings such as -1, -3, or 424B in the last 90 days. We also found no recent reverse split for BJDX within our look-back window. This absence of recent dilution is a positive signal for any potential squeeze thesis, as it means fewer new shares are likely to hit the market from company actions. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given the current metrics for BJDX, what should you watch for? The most immediate factor is volume. Currently, BJDX has zero volume, which means no trading is occurring. For any squeeze scenario to unfold, you would need to see a significant uptick in trading volume and sustained buying interest. Keep an eye on the borrow desk data. Are those 2,000 available shares to borrow shrinking further, or is new supply appearing? Also, monitor any news catalysts specific to BJDX that could spark interest. Given the extremely low estimated float of 0.9 million shares, even a relatively small amount of sustained buying pressure could have an outsized impact if short sellers are caught off guard and forced to cover. BJDX presents a fascinating case study in the world of hard-to-borrow stocks. With an eye-popping 745.4% cost to borrow, a tiny supply of only 2,000 shares available to borrow, and a minuscule 0.9 million share float, the mechanics are certainly in place for extreme volatility should a catalyst emerge. The absence of recent dilution is also a notable factor. However, remember that high borrow fees alone do not guarantee a squeeze, especially when the stock is currently dormant with zero trading volume. Always conduct your own thorough due diligence. If you found this breakdown of BJDX insightful, please hit that like button, subscribe to the channel for more unique insights into hard-to-borrow stocks and short squeeze setups, and let us know in the comments below what other tickers you'd like us to cover next. Thanks for watching, and we'll see you in the next video.